Greetings and welcome to the latest updates on the EV stock market. In this video, we will provide an in-depth analysis of the latest happenings in the world of electric vehicles, including updates from industry leaders such as Tesla, Lucid, Fisker, Rivian, NIO, and the controversial Mullen stock, which has recently undergone a reverse split. We encourage you to watch this video in its entirety, as there will surely be some exciting developments you won't want to miss. So sit tight and enjoy the ride. Tesla recently made headlines by introducing standard variants for its Model S and X vehicles, with the aim of boosting demand by offering more affordable options. This move comes amidst increasing competition in the electric vehicle market and economic challenges. By reducing prices, Tesla hopes to attract a wider range of consumers while signaling a shift in its pricing strategy. The company has introduced new standard range variants for its Model S and X vehicles, priced approximately $10,000 lower than the previous versions. The standard range for the Model X now stands at $88,490, down from $98,490, while the standard range for the Model S is priced at $78,490 compared to $88,490. These price adjustments are an effort to appeal to cost-conscious consumers while maintaining the allure of the Tesla brand. While the standard range variants of Tesla vehicles have some drawbacks, they still offer impressive features. For instance, the Model X standard range has a range of 255 to 269 miles, which is slightly lower than the base model's 330 to 348 miles. The Model X standard range also has a 0 to 60 miles per hour speed of 4.4 seconds, compared to the base model's 3.8 seconds. Similarly, the Model S standard range has a range of 298 to 320 miles, which is less than the base model's 375 to 405 miles. The Model S standard range also has a 0 to 60 miles per hour speed of 3.7 seconds, compared to the base model's 3.1 seconds. Moreover, Tesla's stock fell after the company revealed that it had received a subpoena from the U.S. Securities and Exchange Commission (SEC) regarding its solar roof business. The SEC is investigating whether Tesla had misled investors about the profitability and production of its solar roof tiles. Furthermore, Tesla's stock dropped further after the company disclosed that Autopilot had warned it 150 times before crashing into a police car in February. The crash injured 5 police officers and another individual and raised questions about the safety and reliability of Tesla's self-driving system. Hargreaves Lansdowne analyst Susanna Streeter recently noted that Tesla has been lowering its prices to compete in a more crowded market. This strategy is aimed at attracting more customers who want to experience Tesla vehicles but may be hesitant to pay higher prices. Tesla's decision to cut prices came after it reduced the prices of Model Y variants in China, where sales had not met expectations. Domestic competitors like BYD, which offers more affordable EVs, threaten Tesla's market position in China, a crucial growth region. However, Tesla's influence extends beyond vehicle pricing, as its charging infrastructure is shaping industry trends. For example, electric vehicle startup Fisker recently announced a deal with Tesla to adopt its North American charging standard, which will give Fisker customers access to Tesla's supercharger network by 2025. This move highlights Tesla's dominance in charging technology and its potential to reshape industry standards. The transition toward Tesla's NACS signals a shift away from the combined charging system connector previously backed by President Joe Biden's administration. Tesla's widespread charging network with over 12,000 public fast chargers in the US and Canada has emerged as a dominant force in the market. This transition, driven by competitive advantages, could influence the overall EV charging landscape. Amid escalating tensions between the US and China, NIO's stock price has experienced fluctuations despite recent pullbacks. NIO's shares remain significantly above their lowest levels of the year. The company reported impressive year-over-year growth, delivering 20,462 vehicles in July, reflecting a 103.6% increase while facing challenges in the first half. NIO aims to deliver 250,000 vehicles by year-end, underpinning its optimistic outlook. Technical analysis of NIO stock suggests a bullish outlook. Despite recent pullbacks, the stock remains above the 200-day and 50-day. Moving averages are approaching a potential golden cross pattern. A recent retest of an important support level at $13.16 signals a possible resumption of the bullish trend, with a potential target of the year-to-date high at $16.20. NIO stock rose after the company announced that it had achieved record deliveries of 20,462 vehicles in July, with more than 10,000 ES6 delivered. This represented an increase of 103.6% year-over-year and a new monthly record for NIO. On the other hand, Mullen Automotive reported its fiscal third-quarter earnings showcasing both successes and challenges. While the company achieved its first-ever revenue of $308,000, it also posted a net loss per share of $11.14, driven by initial recognition of derivative liabilities. Mullen's earnings paved the way for a buyback program of up to $25 million in shares, signaling confidence in the company's future potential. In other EV stock news, Lucid posted mixed second-quarter results, with revenue rising 55% year-over-year to $151 million, but they did miss analysts' estimates by $54 million at the same time. Their net loss more than tripled to $764 million, reflecting challenges in meeting production and delivery goals. Despite the disappointing figures, Lucid stock experienced a 12% jump, possibly due to lowered expectations as Lucid seeks to ramp up production to meet its ambitious targets. Its partnership with Saudi Arabia's Public Investment Fund plays a significant role in future growth plans. Lastly, Rivian gained attention as institutional investors, including George Soros, Soros Fund Management, and Co2 Management, increased their stakes in the company during Q2. Soros' increased stake and the divestment of call options indicates growing institutional interest in Rivian's future prospects. Coat's long-term investment approach contrasts with Soros' shorter average holding period, presenting differing strategies for navigating the dynamic EV market. In the end, Tesla's bold price reduction strategy reflects its determination to maintain a strong market position amid increasing competition and economic challenges. As the EV landscape evolves, Tesla's charging standards gain prominence, influencing the industry's direction. We also should keep in mind NIO's performance, Mullen's buyback program, Lucid's growth trajectory, and Rivian's institutional interest collectively demonstrate the dynamic and evolving nature of the electric vehicle market. The race for dominance continues as players adapt, innovate, and strategize to secure their positions in the rapidly changing industry. That's all the electric vehicle stock news I have for you right now. For more videos on the latest stock news and the best stocks to buy, please subscribe to the channel so you can stay informed now that you are equipped with this information. You can now go and make wise investment decisions. Remember always to make sure to do your own research. And with that being said, happy investing.